Hi guys, and welcome to Freckle Finance. Today I'm going to talk to you about GICs. I did two previous videos on tax-free savings account and RRSPs as investment vehicles, and now I want to start covering types of investments. A guaranteed income certificate, also known as a GIC, is a Canadian investment that offers guaranteed rates of return over a fixed period of time. GICs are most commonly issued and purchased from trust companies or banks. The rate of return or guaranteed investment that you get from a GIC is almost always lower than any other investment, such as bonds, stocks, mutual funds, and other investments like that. As well, generally, the longer that you have your GIC invested for, the higher the interest rate you will receive for that investment period. For example, if you take a look at Tangerine, which is an online bank, they have 2% guaranteed rate of return for a 5-year plan that they have. Now, 2% is lower than inflation. Inflation is usually 3%. So this just goes to show you that currently, GICs are not that great of an investment option. Your money is actually worth less at the end of the term than it would be if you invested it in better options. If you go with Tangerine's shortest investment period, which is 90 days, the guaranteed rate that you will receive is 0.75%. That's less than 1% and much, much less than inflation. Keep in mind as well that this 0.75% is a per annum rate, which means that would be the amount that you would make had you invested it for a year. That's not the amount that you will make on that money in 90 days. I looked at several different companies, and 2% was the highest that I could find for the rate of return that you would receive right now for a GIC. So these are not very great returns. However, they can be better than a savings account, especially ones that make like 0.075% or whatever. You know, savings accounts often don't make very much money, and these are guaranteed. And even if you have a savings account that says they will make 2%, that doesn't mean it's guaranteed over a long period of time. It's usually for a temporary period, and they can change it, and they can often do it without notice. So if you're wanting to make sure that you're going to at least be making some money, even though it's less than inflation, a GIC is a pretty good way to go. As I mentioned, Tangerine has a 2% guaranteed rate, and that was the highest rate that I could find. However, for different terms of the loan, let's say 90 days or 3 years or whatever, different banks and investment companies had different amounts that you would receive for your rates back. So when you know what period of time you're wanting to invest it for, you need to look at several companies, and see which one gives you the highest guaranteed rate, because one bank is not always the highest rate for all terms. As well, currently our interest rates are very low, which is causing the GIC guaranteed rates to be so low. But that doesn't mean this is always going to be the case. When interest rates are higher, GICs will likely be higher, which may make it more appealing. It doesn't mean that it would still be any better of an investment option compared to other ones, but it would give you a better rate of return if the interest rates in the country were higher. Keep in mind as well that you will have to set up a GIC account, and if you're not really making that much money off the GIC because you don't have very much money to invest in a GIC, it may not even be worth your time. If you're only going to end up making $20, is it really worth your time spending 2 hours just to make the $20? It may not be. As well, since GIC rates are so low, if you have a large sum of money, this is not where you should be keeping your money either, because it will be depreciating in value every single year. I'm often shocked when I find out that people have most or all of their investments entirely in GICs. This is not the best bang for your buck, and this should not be where the majority of your investments are. If you want the security that a GIC offers you because it's a guaranteed investment, you should still only have a small portion of your total portfolio in a GIC. Yes, it's guaranteed money, but it's not enough to get your money anywhere because it's still lowering the value every year. However, if you have stocks and other items that are making a higher interest rate, then it's still okay to have it as kind of a backup security for when the market goes down and stuff. But overall, you should not be having very much money in a GIC. I personally do not have any GICs, nor have I ever had GICs. At the interest rates that they have been giving since I have been investing, they're just not high enough to even bother with them personally. I want to be making lots of money off of my investments, high interest rates, still keeping, a good risk profile, not keeping it too high risk or anything, but I want to be able to make lots of money so I can retire earlier. So if you have a lot of your money in GICs, or you're really thinking about GICs, just really consider it as a small portion and look at other options that make a lot more money. These risks that scare people off are not necessarily as risky as you think, as long as you keep a good portfolio. If you find these topics interesting and informative and you want to learn more, please click subscribe, as I will be uploading videos every Monday, Wednesday, and Friday. Have a good day. Bye.